Today, I want to talk about how the SEC and the Fed are still scared of the AMC Squeeze. You may remember back in 2021 that the Fed was saying that meme stocks pose a risk to financial stability. Well, it seems like the Fed is once again saying the exact same thing. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Peruvian Bull has tweeted this screenshot saying gaslighting 101. This article from Markets Insider says that Reddit day traders are back buying risky stocks that make a crash more likely. So this article says that bullish sentiment has returned in a big way among retail investors, as they've started the year piling record amounts into stocks. And they said, like the meme stock boom of 2021, investors are picking risky, speculative assets, despite those being the biggest losers during last year's rising rate environment. But strategists are obviously warning that our enthusiasm may be ill-conceived and it may even cause the stock market to crash further. Now, as I said, this seems eerily similar to November of 2021, when the Fed wrote in their financial stability report that meme stocks pose a risk to financial stability and effectively the entire global financial system, effectively saying that meme stock squeezing could end up bringing down some of the largest market makers and some of the largest financial institutions. That obviously goes to show just how exposed these financial institutions and market makers were to AMC and GameStop even as far back as 2021. But now it seems like retail investors are piling in record amounts of money into meme stocks and other risky or speculative assets that could once again cause an even larger crash. It says the everyday traders that powered the meme stock frenzy of 2 years back are rebuffing Fed Chair Jerome Powell's hawkishness and helping to push equities higher after a dismal 2022. And it says while the bullishness matches the meme stock frenzy of yesteryear, the macroeconomic picture couldn't be more different. And they've said that retail investors have a bullish sentiment, but there's a bleak economic outlook, which again to me just really seems like the Fed is actually petrified of us buying and holding more AMC and GameStop shares. JPMorgan have even said there's an old adage of don't fight the Fed, but retail investors are apparently not just fighting, but also taunting the Fed with crypto, meme stocks and unprofitable companies, responding best to Fed communications. So again, apparently retail investors like us are not just fighting the Fed, but apparently we're even taunting the Fed. And it seems like some hedge funds are even taking our side, buying massive chunks of GameStop and AMC. It said in the last quarter of 2022, filings showed that Bridgewater nearly tripled its GameStop and AMC holdings. While Point72 also built their bets on GameStop and also built a $108 million stake in Tesla. But they're effectively saying that all this is going to lead to is an even larger stock market crash where the Fed won't even rescue the stocks. And again, we're also seeing these same absolute FUD mainstream media articles popping up left, right and centre. Suspended POS tweeted saying, good gracious, the mainstream media has no shame anymore. He said, talk about Wall Street being salty and mad as heck. They're going to get vaporised. This article from Yahoo is titled saying what's driving trash stocks such as AMC higher this year. Obviously it's not just the SEC, it's not just the Fed, but obviously these largest hedge funds that do have an ownership and effectively own the mainstream media are trying to spread FUD calling AMC and GameStop trash stocks. Obviously they're trying to do everything they can to try and convince us retail investors to sell our shares before a squeeze ends up happening. Now you may be asking, Tom, why are these hedge funds so scared and why are these market makers going to end up being vaporized? Well, as James has tweeted, we've now reached day 15 on the New York Stock Exchange threshold securities list. He's even listed each and every day that AMC has been on this regulation SHO list, and we're now at that illegal 14th and even 15th day. We therefore have credible, verifiable proof that these market makers are indeed passing the parcel with the FTDs to maintain AMC on this regulation SHO list, where the SEC seems to be taking no action. Also guys, be sure to join me over on Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to 17 free stocks, entirely commission-free trading and free level 2 market data. Moomoo is also very easy to use and has a very simple UI. There's tons of technical indicators and advanced charting tools. With Moomoo, you've also got free 24/7 customer support and you can even trade around the clock. And as Stonks Batman has tweeted, there's also a lack of share availability and AMC is on this threshold securities list, which has led to a ridiculously high cost to borrow and pressure on those short sellers. Throughout obviously the majority of 2022, there was tons of shares available to borrow with a very, very low cost to borrow fee. That obviously started rising again in June and July of 2022, 1 year after the AMC previous run-up's anniversary. And obviously really took off in borrow fees when obviously FTX went under and all of a sudden 400 million tokenized synthetics disappeared. Since that date, there's been very few AMC shares to borrow with an absolutely cataclysmically high cost to borrow fee. There's obviously tons of pressure on these shorts when they have all of these large short positions that they haven't located real AMC shares for. They also can't locate and borrow any AMC shares because A, the borrow fee is so high and there's simply not enough shares left to locate. That is obviously leading to an extended amount of FTDs and AMC being on the threshold securities list for more than 13 days for the first time ever. Now I also found something very interesting, which is this tweet from Mo Astronaut. He said he can't help himself at these prices and people are going to be hating themselves for being fearful, but Mo himself is being greedy. Now Mo has just bought some giant positions in Bed Bath & Beyond, buying 66,500 shares in one trade and another 66,500 shares in another trade, spending over $200,000 on Bed Bath & Beyond shares. Now you may be saying, Tom, how is there enough shares for Mo to purchase over 120,000 Bed Bath & Beyond shares on a fill or cancel order? Basically saying that all of these 66,000 shares must be purchased at $1.52, otherwise the order ends up being cancelled. Surely there's not enough real shares out there to be selling over 120,000 shares at one individual price at any one moment, right? Well, it seems like none other than Citadel Derivatives Group clearly have no problems in filling 120,000 shares for Bed Bath & Beyond. At this point, it doesn't even surprise me that Citadel are blatantly committing crimes by selling synthetic shares for all to see. These brokers, trading platforms and market makers are struggling massively to locate any AMC shares, and that's why the cost to borrow fee is so high. Now I guess it is a different stock in Bed Bath & Beyond, but clearly Citadel have no problem locating some shares. I think at this point, with the AMC cost to borrow fee being so sky high, it really wouldn't surprise me to see another feature of AMC and GameStop in the Fed's financial stability report. I think especially after this crazy quarter or this crazy month and a half where we've been seeing these higher risk stocks like Coinbase, Affirm, Carvana and many others absolutely taking off and leading the charge, it wouldn't surprise me to see the Fed mentioning these stocks once again. The Fed is obviously kind of trying to instill fear into the markets by talking about more rate hikes and being more hawkish and not dovish. But that's obviously kind of being ignored as many retail investors know exactly what we hold with GameStop and AMC, and many of you have also been buying even more shares. I think the Fed is likely going to talk about meme stocks once again, talking about how meme stocks running up is actually bad for financial stability and bad for the financial system, as obviously it's going to lead to these market makers and hedge funds being liquidated. I really do hope that at this point the largest financial institutions and the largest pension funds have actually shifted their risk onto other hedge funds and other market makers and simply allow those market makers to blow up instead. What I would really like to see out of the coming AMC squeeze is pension funds shifting their risk and obviously not imploding during the squeeze, and instead allowing these market makers and bad actors to implode instead. But in the meantime, as Simulation tweeted, the price really doesn't matter. He said whether the price drops to $0.000001 per share, but they haven't covered, he will still hold. I think whether AMC is $4, $6, $10, $2, $20 or $1 per share, if the shorts haven't covered, the price really doesn't matter. He said the colour red doesn't scare him because he knows what he holds and he believes the squeeze is coming. But weirdly enough, somebody else that believes the squeeze is coming and somebody else that believes that AMC and ape conversion is the key to the squeeze is Spence. He's once again flip-flopped and said the opportunity for shorts to cover will never be better than after the ape conversion. He said post-reverse split AMC could be around $35, meaning $3.50 pre-reverse split. And he said their new ape shares converted into AMC at $6.60 to $10 per share as a cost average are primed for covering to cause the squeeze. And he said he's hoping that AMC rockets at least to $150 per share for his exit. Now obviously I would never tell you what price to sell your shares at or what price is a good price to sell shares at because that's financial advice which I don't give. But it's really interesting that once again Spence has flip-flopped and now believes that an AMC conversion and effectively a yes vote will cause the squeeze. It seems Spence is realising just how confident retail investors are on this squeeze and just how worried the Fed still is. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.